Today, something historic has just happened in the global metals market. Silver has surged dramatically in Shanghai, hitting levels near $71 per ounce. This surge has sent shockwaves through Western financial markets and triggered panic among major Western banks. For decades, silver's price has been held down by institutional trading and price manipulation on Western exchanges. Now that long-suppressed pricing appears to be breaking, with Shanghai leading the charge upward. The silver price surge in Shanghai is being watched closely because it reflects real physical demand, not just paper trading. When physical metal demand outpaces futures market control, prices can disconnect from traditional centers like COMEX. Many analysts are asking, why Shanghai and why now? Some point to China's strategic accumulation of precious metals as part of a broader shift in global economic power. Western banks are reportedly panicking because this surge undermines years of price suppression mechanisms. Markets reliant on futures contracts could face enormous stress if physical price benchmarks continue to climb. One major concern is that if real silver demand continues to exceed supply, the prices could outpace other commodities. In some indicators, silver is approaching values once thought impossible compared to assets like oil. This movement isn't isolated. Global markets are watching, with precious metals prices across gold and silver setting new records in multiple exchanges. Investors and traders alike are recalibrating their assumptions. Shanghai's rising silver price may also reflect the demand for silver in industrial applications, from solar panels to electronics, where scarcity can create real supply tensions. Some think this surge reveals deeper fractures in how metals are priced globally, and especially between physical markets in Asia and paper markets in the West. Investors are now scrambling to adjust their positions. Some are shifting into physical holdings rather than ETFs that may not reflect real metal availability. For decades, the price of silver was seen as relatively stable, controlled by big institutional players. This new surge is breaking old assumptions, creating fresh volatility. Experts warn that if this trend continues, it could impact currencies tied to precious metal reserves, potentially reshaping how global finance views silver as both a commodity and a store of value. Some commentators believe this shift signals a broader realignment of economic power toward Asia-based markets that reflect physical supply and demand more directly than Western paper markets. In short, silver's rise in Shanghai is not just a commodity move, it's a signal to markets around the world that old pricing conventions might no longer hold. Stay tuned, because if these price signals continue, the entire global metals market could enter a new era, one where physical demand stars over paper-based speculation.